All right, welcome everyone. Welcome to today's show. I'm the FibStalker. Welcome. Happy to have you here. And before I start, let me introduce very quickly. As you know, I'm going to share the slides here. Thanks for joining in. As you know, this is the FS Street Tokyo Open Live Room. It's a daily show from Monday to Thursday. During and at the heart of the Asian session with Giuseppe Basile. Giuseppe Basile, also known as the FibStalker. Thanks a lot. In this session, we actually identify actual setups level that must be tested and can be traded for opportunities. Of course, all the information is provided for information, general information only, and educational purposes. All right, so I consider risk very, very important. It's the most important thing in trade because as you will experience trading, you will for sure find something that works for you. You will for sure find a method, you stumble into a method that, actually gives you an edge. And so the only reason for not taking advantage of that edge would be if you were actually not managing risk properly. Okay, so trading, you can only be successful in trading if you manage risk seriously. And there are several ways of managing risks, and hope you can hear me here, so I can see the video is on. There is the new website, as you know, and it's absolutely beautiful, and actually it's actually very, very handy, and there is really a lot of information. It's very easy to actually take advantage of it. The only little problem I have here, and my apologies, we're gonna start in a moment here. I don't see the list of the persons who are. I only see the chat. I don't see the names, so I don't know if that's okay. I have there also Mauricio, it's okay that there are no names. I cannot see who's actually in. Is there a list of participants? As I don't see that. Anyway, I welcome you to this webinar. Very quickly, trading Forex and its derivatives, futures, options, and CFDs, and other issuance or retail of exchange transactions involve substantial risk of loss and is not suitable for all investors. You should carefully consider whether this kind of trading is suitable in light of your experience. You may lose all or more of your initial investment, leverage more for you, as well as against you. It magnifies gains as well as losses. Past performance is not necessarily indicative of future results. When we talk about leverage, you have to use leverage, of course, not as much as normally, and this is my personal opinion, as much as the brokers provide to us, but an amount that will allow to manage your risk properly. So proper capitalization is still important for a successful trading. Please also review the FS Street risk disclosure on the website. The information, including commentary and ideas provided in this webinar, should not be relied upon as a substitute for extensive independent research which should be performed before making your investment decisions. All the information as I mentioned before are provided for your general information and educational purposes. I, Giuseppe Basile, FibStalker Consulting Incorporated and FSG will not be responsible for any losses in your investments made by attendees as a result of any information in this webinar. And you can read the remaining of the disclaimer. So thanks a lot for joining in. I think I'm able to see your questions. I don't know who's actually in, so I will use the little information that I have available. Welcome everyone. Okay, so I'm going to open the larger version here. So thanks a lot, Mauricio. Very good. All right, so we are set now. So welcome to Horace, Roland, Adrina, JM. There is Mauricio as well, Adinda, and Daisy, I believe. So welcome, and at this point, I will close the other video here. All right, so if you want my contact information, you can find it here very quickly. So let's dive into the charts. That's what we do and what we want to do here. Again, thanks a lot for joining in today. I have good news today, and I'm very pleased that one of my latest work has been accepted for the Jack Frost Award of Technical Analysis here in Canada. And there was a nominee I received in the morning. I want to thank Colin from CMC and all the people who actually liked. And on June 22nd, we are going to see the results. If you are part of the CSTA, the Canadian Society of Technical Analysts, and it happens that you vote, please take into account my work as well. All right, so let's start from the SP500 here. We mentioned that the SP500 has pierced the market on the upside here, and today also pierced on the downside. So we have a market that for possibly a few days could move laterally here between a very tight range of 12 pips, between 12 points, 13 points here, 2068 to 2055. So this market has bounced from this level, is likely going to test 2067 in the coming hours, and possibly even tomorrow. So that's what we can see in this market here. So as we mentioned, if this level, the 2555 and particularly 2049 was broken on the downside, then we had bears not capable of pushing this price lower, bulls not capable of pushing this price higher. So we have a market here moving laterally. So if you are short, you should be careful. 2055 could offer actually support here in this market, and 2067, 68 actually offer resistance here. So trade this market carefully. Of course, the bottom of this range is a buy. The top of this range is a sell. The dollar index, we noticed that there was a blip here in basically yesterday, the whole yesterday day. The market moved lower. The point is that this market is still in a correction here, higher, and we know very well that according to the rules we use, once a trend is actually stopped on one direction, we look at the trend in the other direction, and this market has traded an extension here, 93.50, pushing price into 94.65 and 95.15. So if you're long this market and you entered at lows 93.67, this market is still long, and it has the potential to go all the way into that second target, 95.15. Okay, so This is a 93.67, and the target are 94.65 and 95.158. Okay, 15. So this means, this participation here also means that US dollar Japanese yen and US dollar Canadian dollar, which are the two next markets I'm going to review here, have the potential to continue lower, at least for a while. And with that, they have the potential to continue their correction higher. And with that, the euro dollar can keep moving lower. Indeed, today we saw that market trading a level that was identified yesterday and actually traded yesterday as well. And this level, as you mentioned yesterday, this level had the potential to keep pushing this price lower into that 113.16 and down into the next level, which is 112.80. So thanks for joining in here. We have Adrina Roland. Thanks a lot, Mauricio. It was very good news, and I'm happy that that work will be considered. I can see now the full chat. Thanks a lot for being here also today, as these changes on fsstreet.com are coming in. The new website is very exciting. And I see Jason has joined as well. Welcome, Jason. All right, so yeah, going back to the euro dollar, then the euro dollar has traded that level we mentioned yesterday. This is an extension, and this extension has the potential to bring price into 113.16 and then 112.81. Any bounces in this market are sell. And you want to bring that price, if you shorted, you want to bring that price into 112.81. Okay, so that's your level there of reference. So no need to do anything in this market if you are already short. And if you are not, if this market bounces higher, let's see here, this market could have some support below price here, so we could see another stub. So let me give you a level that you can watch here on the 4-hour time frame, which is certainly something that if it comes into play, you want to look at, and that's the 50% level from highs to lows, the 114.08. If the market 114.06, 08, if the market gets there, that's certainly a level that you want to test for continued charts. Okay, I wouldn't be worried of this double bottom here. This is not a double bottom. This market is still moving lower, and remember the dollar index is moving higher. So do you see that in the context of what is happening in the dollar index as well, this double bottom is really not there. So it's always, you have to be very, very careful and always put your formation in the context of what price is doing and what algorithms are doing, how they are positioned on the current market. Because if we know that we have a short at 114.69, certainly we're not going to play a double bottom here long. And if that is a play, it will be a very quick trade into a potential level of resistance 114.80, 08. Okay, so that's something that you want to keep in mind if you plan to act on a potential reaction for this market. Okay, if you have any questions, as you know, I never shy away, and I'm very happy always to answer questions. I know that most of you like to look at the review. This is what we just start reading the comments there. Okay, so it would be good to have Dale back. Yes, you know, Dale is very much missed. He has been doing a great work in the lab, and I've known him well before he started. And actually, I was the first one who was interviewed in the very first session he had back in I think in June 2013 now. Anyway, so let's go back to the markets here. As I mentioned before, so euro dollar, it's important to keep in mind. I just want to write down these levels for you, as I'm going to write down a brief report. So we had 114.46 area that is traded as indicated yesterday. And then if the market bounces here, it's possible that this might start a bounce here. 113.90 would be an area to watch for a continuation lower here. Right. So as we mentioned before, the dollar index has basically found support and extension long at 93.67, and is moving into potentially into first and second target 94.65, 95.15. As the dollar moves, the dollar index moves, keeps moving higher. Of course, you know, there will be potential impacts on US dollar, Japanese yen, and the US dollar, Canadian dollar. Now, we always have to remember that euro currency is around, it's more than 60% of the dollar index, while the other currencies here, US dollar, the Japanese yen and the Canadian dollar, are a much smaller percentage. I believe, if I remember well, from the latest data that I've watched, it's 11% or 13% Japanese yen and 11 or 8% the Canadian dollar. So clearly, while that inverted relation is very much clear, specified, and also immediate for the euro dollar versus the dollar index, that's not the same we can say about the US dollar, Japanese yen. However, this market has traded in the last 3 days into an area of potential resistance starting at 108.70, and this has been so far pushing this price lower into an extension long here that has held so far. That's 108.39, and that has held price today. However, as price got into that area where potential participation on the short side is coming, this price, as you can see, has been pushed lower in the last part of the daily. This is the daily chart. On the 4 hour, it's evident that double top here within an area of participation short, and with the fact that the dollar index is keeps pushing higher in extension, this market might keep pushing higher here despite it's in this area. So we see a double top here. And this double top is within an area of potential participation on the short side. However, we also had the dailies here, the 4 hour time frame coming into the picture. And so at the moment we have a 4 hour time frame which is pushing against the daily shorts, and so far the 4 hour is winning, which means that there is much more interest in pushing this price higher. If that's the case, we should see 109.45 fail quickly, and that 108.40 should actually bring price above into 109.81, 80, and then potentially even higher into 110.54. This does not negate on the larger time frame the move lower that we have in the US dollar Japanese yen. The US dollar Japanese yen has reacted for me as profit taking here, and because of the effects of the dollar index. The dollar index, to me, it's looking for an area of resistance, and the same will be happening to US dollar Japanese yen. In fact, we also indicated a potential area of resistance in this market, which comes on the weekly time frame, and that would be the 110.82. So if the market trades into that second target that we have here, that would be very, very close. The 110.54 would be very close to that 110.80, and I will actually identify this level in bold here, because you want to keep this level in our minds. We want to keep this level very clear to very clear here, and we might need to relate with this level. And if the price extends itself, it's going to be easier to actually confirm the participation from the larger time frame from this 110.80. See also Nick coming in, Horace, thanks for joining. So it is very interesting that this market has the possibility to move in extensions, because when the market moves in extensions, it's easier for the market to fail the current trend. Okay, so that's something you want to keep in mind. So again, US dollar Japanese yen is following the dollar index. The dollar index also found support at an extension and has the potential to move into 95. When we look at US dollar Canadian dollar, we don't see the same thing. We see a similar behavior, but this market is weaker than the US dollar Japanese yen, and this market has, in the last few days here, despite the market having a positive day on Tuesday, this market actually has sold off here. Now, this market might also be going to look to find an extension in order to continue, and that extension has been found today. So we will see whether this market is going to bounce like it has happened to the US dollar Japanese yen, or this market is going to continue lower. In any case, there are trades here. The long, if the 127.89 is retested, you can apply one of your timing techniques. I use the FibStalker timing technique, and we can actually, if we get a bounce, we can actually push price below this area of resistance here into 131.20 and potentially 139.92. So these are levels you want to keep into account here. So for the US dollar Canadian dollar, it's weaker than US dollar Japanese yen, and it's moving. It has potentially found support at this 127.90 area, and if that is retested, we could see a renewed participation on the upside. We saw this participation here at the US Open today, and then if the market comes back, we can actually test this level again on success in testing the level. If that happens, we could actually, if you have not entered it, on a second test, you could enter a long as well. Okay, so on a second test is a buy, is a long. So we will see whether this market too will restore its move higher alongside the dollar index. I want you to keep in mind the dollar index as setups and the potential to go back into the 96.35. And that's a short, as I believe the weeklies are not supporting this market any longer. Okay, so weeklies in this chart, the way we analyzed it and the way we showed that weeklies have been defending an area for more than 1 year here, but recently they have actually let this market slip below that area. That's a very, very important development, which actually puts this market into a condition where strong resistance levels will be and might be played by strong hands and large algos and large professional. A professional with large portfolio here that might decide to sell the dollar against the other currencies. So we will see how this market is going to behave. So we covered then SP 500, dollar index, euro dollar, US dollar Japanese yen, and US dollar Canadian dollar. I don't see a question tonight, so I'll just continue with the analysis here. If you have any pairs you want me to review, I'll be very happy to do that. So Euro Australian dollar has actually pierced the 61% level here, which does not offer resistance any longer, and it came to trade at 50%, 154.70. Since then, it has actually pushed higher. Today, again, it tested the highs here, and then it started moving lower. So we're not going to act on the short side until I will see 153.63 pierced here, because this market is still participation on the upside, and there's a possibility on the smaller time frame to capture that continued move higher. Should price come below 153.63 though, what would happen is that the market would start finally a potential correction lower. I mean, all these markets eventually correct. This market is not going to continue higher forever. When they will correct? They will correct to either a 50% retrace, as it happened in the past year, and actually the market didn't make it there, so it has been using a different anchor here, or there is an extension typically. Okay, so this market is very, very extended, so I'm not anticipating a full 50% retrace. And when and if that level, the level that I've indicated before on the daily, so that's the 53.63, is pierced on the downside, I believe you're going to see a much larger retracement here into 152.20. So can we short pound Australian dollar now? So let's look at it. No, you cannot short the pound Australian dollar now. It would be very, very risky to short the pound Australian dollar now. So this market has been trading a 50% retrace from lows to highs to 183.04. On the weekly, it's on a long. And shorting this market here would be putting yourself in front of a train running. So this market has to be traded on the long side, because it has pierced 95.55, but then it has respected it after that. So it has not continued lower for a reason, because this market does not have any resistance above it until we get into 202.44. In fact, I've been suggesting to buy this market. Okay, so Drina, be very careful here. This is not the time to do that. We were looking at, and we looked at a situation where this level has broken, giving us an indication that any up move would be driven by the smaller time frame. We got that up move, and then we were looking for a continuation lower here. That continuation lower never came, meaning that the algos on the 4 hour that did not participate here, they started participating here and defended this level. Eventually, the 895.55 was defended. Now, if we were to short this market, and there are ways to short this market after this break, we would have anyway at some point decide to exit, and there are ways to get a risk-free trade as soon as the market starts moving in your direction. So any stops above this high would be stop at the cost of trading. Okay, so but clearly, and I think the way algos are positioned here clearly shows that this market is continuing higher. And when we look at the weekly time frame here, there is no reason to short until we get into 202.44. There is nothing blocking this market at this stage before it gets into that level. When it gets into the level, I will provide information to actually take a position here and trying to generate as soon as possible a risk-free trade here, okay, which is what we want. All right, good. Thanks for the question, Adelina. If you have any other markets you want me to review, I'll do that. So we reviewed Australian dollar, Euro Australian dollar, very similar situation we have for the Euro Canadian dollar here, which went to trade a level that was known with basically almost 3 days in advance. Yeah, this was an extension that they traced. You can go back to the videos from highs to new highs here on Monday, and then Tuesday, Wednesday, today, the market has tested the level, and as it has tested the level, it has bounced on that level. So silver and gold here, I can actually I don't follow the CFD. I follow the futures, the mini futures here, but obviously the movement are the same. I don't particularly like trading silver and gold on the CFDs, but rather it's much better ETFs, leveraged or not, like SLV, because of the volume. Okay, so when we look at silver here, I mentioned that this market had started a move lower. There was an intraday breach of the 1734, but today the market came back, and as I mentioned yesterday, this area has been respected here, and the market has moved lower. So my view on silver, Roland, is a continued mover lower into 1626 and potentially a test of the 1593. And I'm gonna take some note here. So 1734 has been respected, and this has a first target. As you can see here, it's a long way. If you're short silver, there should be no reason to remove that position. 1626. And see a continuation lower here into, as I mentioned, so 1626 would be your first target, and you want to remove a part of your position there, because this market tends to trade 50%. So if he gets there, he could retrace all the way into the highs to lows here. So you want to take some profits there, and potentially this market could continue. So 1626, it's good for partial profits, and then the market could move into 1593 for actually to test longs, okay, to test weekly longs. So this is what you could see in this market at this stage. Okay, so hope that answers your question. So you're very welcome. If let's give a quick look at gold as well. That actually has shown an extension long on the weekly. That extension long was known with all these weeks in advance. So since the beginning of the year, basically. Why? Because the level, the low was printed at the beginning of the year, was never challenged, and we had this extension, and we waited into that level. As you can see, that market need to test these levels, and these levels were tested successfully so far. Silver is showing a setup short. This market has not traded longs here. It's not traded at 12.57, but rather it has traded shorts first. Very much like the and yesterday is short at 12.83.50 to the tick here, and this again is showing that there is the potential for gold as well to be pushed into 12.49. At that point, I would also anticipate a break of the 12.46. So you need to know this level in advance, and what I do in my trading, I identify this level in advance. This is on the daily time frame. So this level, when this low was printed, we knew this level with 1 day and a half before. So you knew this with 1 day, 2 days in advance, basically. Okay. And so whenever you have these levels, you have to learn to test this level with a small risk. And one of the techniques I use is the FibStalker timing, which I teach as well. And I want to thank, I don't know if there is anyone here who has joined my coaching program. Thanks for joining. I had an interesting class of 18 people this session. And we will see. I'm not sure whether we'll have a session in October or directly next year in January now. So this is it for today. I will start a summary right now. So we started from a review of the S&P 500. We mentioned yesterday that after breaking this level, the 2076, the market had the 50% level opposing 2055 to test. Now that level was tested and was not tested successfully. In fact, price just broke the 61% level and came in again. And I mentioned that if we break this level, this market will start a lateral move here between these two areas. So this market is basically moving laterally between 2055 and 2067. We then reviewed quickly the dollar index and showed how this market has found participation at an extension here, 94.65, pushing price potentially into 95.15. And we also mentioned on the weekly time frame that there was an important violation a few weeks back that is showing us that the weeklies have no interest, the smart money, large funds, algos, they have no interest in keep pushing this price higher. So this price is really looking for a resistance level. And I believe that this market can move all the way into 96.67. There's another level that we have to consider as well, with this, which is the high from the recent swing here to lows. And that's another level I would consider, 96.34. We then mentioned the consequences or the effects that such a move on the dollar index could have on the euro dollar. Yesterday we mentioned the level that was tested successfully, 114.46, and this market now it's up potential move lower. If you have a short in this market, keep the short into 113.16 and 112.80. The other markets that might be affected, not directly, like the euro dollar, which is 60% of the dollar index, but might follow anyway the same direction indicated by the dollar index, are the US dollar Japanese yen and the US dollar Canadian dollar. US dollar Japanese yen has traded an extension here, which held. It was tested yesterday. It held in the morning, and although we saw a little bit of weakness here, this market could actually continue higher here. Why? Because the US dollar index is doing exactly the same, traded an extension and moving higher. So we should soon see 109.80 80 and 110.55, which are going to help price into that 110.82, which is a level that we indicated here. And this level, it's a potential level of resistance for a continuation lower. It all depends on what the dollar index will be doing as well. Similar situation for the US dollar Canadian dollar. It has bounced from an extension here, not as strongly as the US dollar Japanese yen, but nevertheless, it found support at the market open here, not really at the US Open. The US Open is a little bit earlier there, but after that, and this market could then continue higher as well. I've indicated some targets and some levels that you can review in the article that I'm going to publish later on. And every day I want to let you know that there is this summary to which we attach a brief article, so I suggest you review that as well. The next level is the next market we reviewed is the pound versus Australian dollar. I was asked whether we can sell this market. Absolutely not. We cannot absolutely sell this market. This market offered a potential sell signal, and that happened when it initially broke this level on Monday here, the 195.55. The market was moved higher by the smaller time frame, and at some point it gave an indication for a short. That short didn't follow up. So if it was a short, it would have gone below this level. However, we do not have enough sellers on top of this price here to generate that kind of move. In fact, we will have that those sellers potentially only at 202.44 here. So until we get there, no shorting for this market. This market is a long, it's not a short. And the last market we reviewed the two markets, silver and gold. Silver has broken this 1751 on a spike here, came back into and below the 1734. Then in the morning, in the market, moved higher here and start selling from there. So we have a target 1626 with a potential 1593 to be tested. And this is in line with what we saw on gold, which not only has traded 1300 here short, which is an extension short that was looming there, level that was looming there since the beginning of the year and before that, a few weeks before that. But not only that, it also has traded the shorts before trading longs. In fact, it came all the way into this 1283.50 that has traded to the tick here, and this is pushing price lower into 1257 first, which would be retested a second time. Sorry, which should be tested the first time because it was never tested before. And then I foresee a potential continuation lower. If you have a short here, or if this level is retested, you can take a short in this market. Okay. And this is all for today. I want to thank you for joining in today. As usual, if you have any questions, you can send them to me at FibStalker@gmail.com. And I want to thank you for being here. Have a good day, good evening, or good morning. And I hope you enjoy this show as well as you enjoy the markets. Thank you very much, and I'm going to see you soon. Bye-bye now.